Let's get across the market open. Jimmy Jang joining us from GPA Capital. Jimmy, welcome to Friday. Good to have you back on the show. Let's begin with what we're seeing in the States at the moment. Very much a focus on that jobs data.
Morning, Andrew. Of course, the market is obviously looking for that the softening labor market. So obviously, the forecasts are pointing to an unemployment rate of 4.3%, and the non-farm payrolls expected to be at about 75,000. So these figures are obviously very modest, and it's also kind of suggesting that the U.S. economy is slowing. And which kind of strengthened the expectation of a 25 base point rate cut this month. So markets already pricing in around 98% chance. And what we kind of be concerned of, if the data report comes out actually a lot more weaker than the market anticipated, that's obviously good and bad because it obviously fuels that chance of the 25 points rate cut. But at the same time, if the labor market is cooling too quickly, that's also pointing towards that the US economy is really slowing down a lot more quicker than the market anticipated as well. So that we'll see obviously come through in the reports of the top 500 S&P 500 companies. So, really interesting to kind of keep a close out tonight over what's happening over in the US. And on top of that, the Fed obviously wants to avoid those over tightening as well. So, if we see the softer labor data gives them the more confidence to ease policy, we'll kind of see how they will play out this month. But, generally speaking, really good month.
Well, and in fact, we've seen more records on Wall Street. I guess certainly as investors looking towards further rate cuts, the S&P touching another record overnight.
Of course. And another point to really kind of focus on that, I don't think market's really talking too much of, is the tariff lawsuit that Trump's facing at the moment. Look, it's a big number. It's about $200 billion in potential refunds that the administration might have to give back to the U.S. business. And he also introduced that additional fiscal uncertainty on top of their record, and debts that the government is incurring. It obviously won't impact this month's Fed's decision directly from our view, but it is another layer of risk that could really weigh on the business sentiment and obviously that trade balance, heading into the election cycle as well. And historically, September has been a tough for the U.S. equity. It's been the weakest month for the S&P 500 since 1950. So, and averaging out roughly about 0.7% loss in September. So, combined with that policy uncertainty and obviously the slowing data, it calls for that selectivity as well. So, for those long-term investors out there, it will be a very good month because, with the, a potential pullback we might see in those, top 500 companies, we might see some really good buying opportunities. But at the same time, we've got that potential rate cut coming on as well as serving as a cushion for those short-term investors as well.
Whereas, what are you seeing here, Jimmy? Now, obviously, we had the stronger than expected GDP read midweek, perhaps eroding any chance that the RBA is going to cut later this month.
Absolutely, you're spot on, Andrew. So that stronger Q2 growth has that eased immediate pressure for an RBA rate cut. Financials kind of led the charge, so it's up to 1.7%, hitting their best level since late June. And it's kind of a sign that the economy is more resilient than expected, particularly with improving trade flows. So at the moment, I think that's a good thing because Australia has, also recorded a trade surplus with the US. It's obviously a good positive shift. We exported about $4.8 billion worth of goods to the US. More than double the from the previous month, while the imports were $4.4 billion. So that reversal kind of supports the Australian dollar and also shows our export sectors as well. So in the midst of the tariff war that's still ongoing, these type of track record is showing really good results for the Australian businesses.
Now, what are you seeing at an equity level, Jimmy? Obviously, in the wake of reporting season, many of those stocks trading ex-div this week and next. What are you watching at the moment?
Yeah, so today, for example, we got Amcor, Coles, Eagers Automotive, and the Viva Energy all kind of trading ex-dividend today. But in particular, I think the investors should really watch out for Eagers Automotive. So Eagers Automotive, they delivered vehicle deliveries rose around 2.9% year on year in August. That's marking their third straight month above 100,000 units. What's kind of interesting, we saw in the report is the surge in Chinese-made brands that totaled roughly about 20% of their entire sales last month. So that's kind of reflecting that, the shift of the consumer preference in the Australian auto market. So not just the company itself, but it was very interesting to see that the Chinese automotive vehicles is slowly dominating the market and it's obviously very well reflected in the Eagers Automotive. So with the ex-dividend, might obviously pull back, but if it does, I think it will be a really good pickup for a lot of investors out there.
Now, I see you also, obviously, gold and silver, precious metals doing very well at the moment. How are you playing that?
Global silver demand has now kind of exceeded supply for about 4 consecutive years. So, about 148.9 million ounce deficit in 2024. So, I think that the industrial demand is really booming. It's up around 4% to a record 680 million ounces. It's largely driven by renewables and electronics. So, one interesting play that we did is we were the lead manager for Argent Minerals, ticker code is ARD. It's coming off a trading halt today, and it's owned about Australia's second largest undeveloped silver deposit at Kempville. But it also has a district scale gold project as well. So it has a diversified two main commodities in the sector, gold and silver. But definitely Argent Minerals will be a really good one to slowly watch today after it comes to trading halt. Given all the really strong rally we've seen in the silver price.